Hey guys, it is Julie here with TipRanks. In today's video, we're taking a look at 3 strong buy stocks recently picked up by one Billionaire's fund. So let's get into it. Alright guys, welcome back and thank you all so much for being here. Today we're looking at 3 stocks that have been recently picked up by billionaire Ken Griffith's fund Citadel. Citadel manages approximately $39 billion in assets. Now all 3 of these stocks today come in as a strong buy from analysts, so we're going to take a look at what these companies do and what those analysts are predicting for the stock's future. Just before we get into all of that, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you subscribe to the channel as well so you can stay up to date with all of our latest videos. Okay, let's get right into these 3 strong buy stocks. First up today is a company called Rocket Lab. Their stock trades under the ticker RKLB, currently priced at $12.75 per share. Rocket Lab is one of 2 private companies that have delivered regular and reliable access to orbit. The company has had over 20 launches to space, over 104 satellites deployed to orbit, 3 launch pads, and is the second most frequently launched U.S. rocket. Their customers include some big names like NASA, the U.S. government's Space Force, and Canon. And they boast world-leading technology. They were the first with a 3D printed rocket engine, first electric pump-fed rocket engine, first carbon composite launch vehicle, and first private orbital launch site. Rocket Labs just went public via a SPAC this summer in August. They merged with Vector Acquisition Capital and realized $770 million in new capital through the deal. In their most recent quarterly earnings report, they advised that the order backlog increased from $141 million at the end of Q2 to $183 million at the end of Q3, for a gain of 29%. They saw year-to-date revenue of $34.8 million, representing a 79% year-over-year revenue growth, and finished the quarter with $792.7 million in cash on hand, reflecting the new capital from their completed SPAC transaction. During the third quarter, Ken Griffin's fund picked up over 1.7 million shares of Rocket Labs, and at today's prices, that would be worth about $22.5 million. One analyst weighing in on the stock is Austin Moeller from Canaccord. He writes that we believe that Rocket Lab's substantial first-mover advantage in the small launch sector, robust customer base, and overall launch pedigree will allow Rocket Lab shares to enjoy a significant premium over industry peers. We also believe that Rocket Lab's dedicated small launch market niche has already established segmentation relative to competitors like SpaceX. We believe that the company's competitive advantage over new market entrants and production scale justifies significant upside in the stock price. The Rocket Lab stock currently has 5 analyst ratings and comes in as a strong buy based on 4 buy ratings and 1 hold. The average price target comes in at $21.20 per share. That would be an upside potential of nearly 64% for this next year. On the low end, we do have our hold rating from 3 months ago with an upside still of 39%, and on the high end, we have Austin's price target of $28, which would be growth of 116%. For the second stock on our list today, we're moving over to the fitness world with F45 Holdings. F45 Training trades under the ticker FXLV, currently priced at $12.65 per share. What is F45? Well, the F stands for functional training, a mix of circuit and HIIT style workouts geared towards everyday movement. 45 is the total amount of time for sweat-dripping, heart-pumping fun. Their classes offer functional HIIT for a full body workout, team training for that encouraging community growth, and is done in 45 minutes where you can burn up to 750 calories. Along with their in-studio workouts, they now also offer workouts at home to adapt to the stay-at-home orders during COVID. They provide clients with different workout challenges that also include meal plans that can be shipped directly to your home. F45 has over 3,000 total franchises sold, with over 1,600 total studios across 65 different countries. F45 is also quite new to the public market. They had their IPO in July of this year, where they sold 18.75 million shares at $16 per share. But shares did drop significantly following their Q3 results, which spooked investors a bit. This was due to a revenue shortfall and some lingering shipping and COVID risks. They did see their total revenue increase 24% to over $27 million, and their same-store sales increased 6% globally. Their net initial studio opens totaled 63 compared to 101 in the prior year period, and they had a reported loss from operations of $90.6 million. But this didn't seem to scare away Ken Griffin's Citadel, as they picked up over 1.3 million shares for a total value of about $16 million. Also feeling bullish on the stock is five-star analyst Randall Koenig from Jefferies. He saw the fall in the share price spark an interest. He says that we believe shares of F45 are de-risked in the near term due to recent weakness post-IPO, which presents a compelling entry point. Additionally, we believe the company's long-term growth prospects are attractive as the business has experienced a strong recovery from pandemic lows. F45 is one of the fastest-growing fitness franchisors in the U.S. with contractual recurring revenue and a strong and growing global presence. He's one of 3 analysts that currently have a rating on the stock, and it does come in as a strong buy with unanimous buy ratings. The average price target comes in at $19.67 for a potential upside of 61%. On the low end, we do have a buy rating at $17, which would be growth of 39%. And on the high end, we have Randall's price target of $23, which would be growth potential of 88%. And third on our list today, we have a biotech company with JSPR Therapeutics. Under the ticker JSPR, they're currently priced at $8.55 per share, and you can see they've had a pretty wild ride in these last couple of months. They hit the market in September following a SPAC merger that brought them $100 million in gross proceeds, and their stock definitely had some volatility right out the gate before settling around current prices. JSPR Therapeutic is a clinical stage researcher working on hematopoietic stem cell therapies. These are the stem cells that give rise to mature human blood cells. Transplants of these stem cells are used to treat both immune system disorders and various cancers. JSPR has one lead product, JSP-191, a novel compound designed to assist and facilitate HSC transplant treatments. The drug candidate is a targeted humanized monoclonal antibody under development as a clearing and conditioning agent for use prior to HSC transplant. By using mRNA or DNA editing, JSPR can give the modified donor or autologous stem cells a proliferative and survival advantage over the patient's existing stem cells. Their aim is to achieve superior engraftment, leading to higher percentages of therapeutic transplants and more effective gene therapies. Preclinical studies show safe use of the JSP-191 in animal transplant models. The drug candidate is currently in 2 early-stage human clinical trials. They ended their third quarter with cash and cash equivalents of $100.9 million. Now, this is expected to be sufficient to fund its planned operating and capital expenditures through mid-2023. For the third quarter, their net loss was $3.4 million compared to the net loss of $10.8 million for the third quarter in 2020. Ken Griffin's fund picked up over 3 million shares of this company for a holding that is now worth over $24 million. One analyst weighing in on the stock is Judah Fromer from Credit Suisse. They wrote that we see promising preliminary safety and efficacy data for JSP-191. We see the potential for JSPR to emerge as an attractive M&A candidate if there is further de-risking of the pipeline assets. In the near term, we expect interest to be more limited as potential acquirers await clinical data for the various programs. The JSPR Therapeutic stock does have 4 current analyst ratings and comes in as a strong buy with unanimous buys. The average price target comes in at $18.50 per share. That would be an upside potential of 118%. On the low end, we do have Judah's price target at $15, which would be an upside potential of 76%. On the high end, we do have a $21 price target, which would be growth of 147%. Please just keep in mind that any biotech or biopharma company is extremely risky though, and those price targets very much depend on successful trials for their drugs and can easily go very drastically the other way if they're not successful, so approach with caution. But anyway, there we have 3 strong buy stocks recently picked up by billionaire Ken Griffin's Citadel Fund. Now, let me know your thoughts in the comments on these 3 stocks. I always love hearing from you guys. If you made it to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Please keep in mind these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Please make sure you're always doing your own research and due diligence. Thank you guys so much for watching. I hope you have a fantastic day, and I'll see you back here next time.